All right, everybody, welcome back. It's Monday. It's a big week. Friend of the pod, Brad Gerstner, has penned an open letter. It's exploded on Wall Street today to the Meta Corporation, aka Facebook, on behalf of his fund, Altimeter Capital. We're going to break down why he wrote this letter and what it says.
Yeah, it's basically a plan for Meta to cut capex, boost free cash flow, or one assumes alt cap is out. We'll see. And then we cover the Fyre Fest Island back in the news as a home for luxury properties to be purchased with NFTs.
And Fast Company has published a hit piece on Divvy Homes and the CEO, Adena Hefets. And we'll break that down and just how you can identify when a story feels biased and it's a hit piece, which is when we kind of agree feels like.
It's got the vibe. It's got the vibe. And then we just have some random musings at the end of the show because you know what? We miss each other on the weekend. And then when we come back together, we just want to talk about like China and the future of humanity and whether we're progressing in the right direction and the J-trade portfolios. And it's like you got to hang out. Reconnecting on Mondays.
A standard Monday show. So it's going to be a great episode.
Stick with us.
This Week in Startups is brought to you by Linode. Apply to Linode's RISE program for founder-led early-stage startups and get a $500 credit, up to $120,000 in infrastructure credits in year one, cloud consulting, and so much more. Apply at linode.com/twist. House of Macadamias is the next big health trend. Get 20% off your first purchase at houseofmacadamias.com/twist by using code TWIST20. And Vanta. Compliance and security shouldn't be a deal breaker for startups to win new business. Vanta makes it easy for companies to get a SOC 2 report fast. Twist listeners can get $1,000 off for a limited time at vanta.com/twist.
All right, everybody, it's Monday, and there's a lot of news for us to discuss. But first up, Molly, how was your weekend? You have a decent weekend?
I did. I did some really good hikes, not dangerous at all. Some Halloween decorating, some real quality time with my child. It was a great weekend. It was like just chill. There was like a lot of travel recently. Just shut it all down. It was great. Awesome.
A little downtime, always a good thing. Always a good thing. And I got a little downtime. The kids and the wife went out a little bit on Saturday, and I worked. I was like, you know what? I'm just going to go dive into the Slack replies and just, we have this founder Slack with 400 of our founders in it. And so at any point in time, I can just do 2 or 3 hours of just going through our portfolio companies and just saying hi and jumping into conversations. It's wildly efficient.
Oh, it's wonderful.
Super
I know,
wildly
it is kind of nice. My son was actually supposed to have friends over on Sunday, and I was like, this is going to be amazing. I'm going to get so much work done. And then they bailed on him, and I was like, son of a biscuit. So I had to go to bed. I do this thing where I'm like, I have to go to bed at 8. And I get in my laptop. I get in bed with the laptop, and I'm like,
the device gets you every time. Now, if you want
I do it on purpose. I'm like, good night, son. I have to go to bed now. And it's really just so I can get some work done. Bless him. Yeah. Love him. But he really wants to hang out with me still.
Yeah, I'm right around that point where I understand, 12 to 15-ish, they start, like the peer group and other things become as important as mom and dad or whatever. And so I think I'm, enjoying the last days with my 12-year-old before she starts finding more meaning, but it's been delightful. By the way, I took them all to see Black Adam on Friday at my favorite movie theater.
Nice.
We have these fancy Cinepolis theaters. Shout out to them. Like you press a button, you can order food. So when you have kids, this is like a super unlock because it's dinner and a movie at the same time.
Oh, hell yeah, yeah. Mm-hmm.
So in terms of efficiency, you know what I'm talking about. Even down to I just have to pay one credit card bill. I don't have to fill out 2 slips. I can just zip. And it's dessert. So, we get everything done. And my Lord, these kids love this movie theater and doing this.
Was Black Adam good?
Excellent. The kids loved it. Excellent. I'm not a Rock guy. Like I'm not into The Rock. I know that he's a big draw, and I was super skeptical about this one. But no spoilers or anything. But it does seem, based on the conversation which we had with the new head of, if people missed it last Thursday, we had the new head of DC Comics on, Lon Harris, who's running the show over there. And he said he was going to have multiple timelines in his new version of this, how to manage DC. And I'm very much enjoying, this timeline, which is the kind of the Snyder, Patty Jenkins verse. And now it seems like The Rock is going to be the anchor of this, because Black Adam, which is a character I really did not care about, is awesome. He's just an awesome, fun character. And he's going to fit in quite nicely. And they had this Pierce Brosnan was in there.
As long as they leave room for Aquaman, Lon. As long as you leave room for Aquaman. Because
keep Aquaman in the mix.
I love The Rock. I am a longtime Rock fan. I go all the way back to the people's eyebrow. Love The Rock. But don't be kicking my Aquaman out of bed for eating crackers here.
Yeah, no, he's great. So anyway, delightful film, delightful time with the kids. It was very cute too, because, I got the 6-year-olds and we sit in these big chairs. Now, when you're in a double chair, it's almost like 2 reclining chairs, like 2 first-class giant chairs.
Aww. With
a little arm between it. And she pulled the arm up and she just started snuggling me. We got my arm around her, she's got her head on my chest. We're watching Black Adam together while eating pepperoni pizza. I mean, you're talking about peak experience in life. For me, pizza, my daughter, and a comic book film.
The best.
Everything is right in the world. It was like you were reading Arrival this weekend, so you were having peak experience because you're a sci-fi nerd.
Well, I had this kind of awesome thing happen where my phone died overnight because it didn't charge. It wasn't seated right on the wireless charger. So then on Sunday morning, I got up and nobody else was up. And I read a book on the couch, some sort of bizarre old school. I lit a candle. I didn't really, but I was just like, what? Is it like the before times, pre-industrial age? What is happening? A book on paper, physical book.
On paper. Did you make yourself a cup of tea?
It was amazing.
A spot of tea?
No, gross. What is with tea? Why is everybody into tea now? Have you noticed this? Tea is
I was stereotyping you as
have coffee.
All right, jerks. I just thought you were trying to celebrate the moments of your life.
I know. I really
it almost feels like it's a TV commercial. You were doing it for me. Speaking of doing it for me, a friend of the pod, Brad Gerstner, decided he's a shareholder in this Meta corporation, and he decided he had enough of losing money, apparently. As Mark Zuckerberg, spends money like a drunken sailor on this VR debacle, and Brad Gerstner decided he would write an open letter. Now, he's got a lot of Facebook stock, and as we've talked about, Zuckerberg has these super shares. Zuckerberg's great grandchildren are going to control this company based on the way he structured the voting shares. Yeah. But maybe you can give us an overview of this letter that Brad wrote.
Yeah, this is a shot across the bow. So it is, as you said, an open letter published to Mark Zuckerberg and the Meta board, urging them to tighten their belt and sharpen their investment focus. The plan would 2x annual free cash flow to $40 billion, double down on AI, but put a cap on metaverse-related investments. So not that kind, not the metaverse kind of AI. For some context, of course, Meta has been tanking to quite an astonishing degree, actually. Meta stock is down 55% compared to an average 19% for its big tech peers. It's down, that's over the last 18 months. It's down 60% just in the past 52 weeks. We'll get to the letter and some of those details in a minute, but there was a comment from Bill Gurley almost immediately in response to Brad Gerstner's tweet about the open letter, saying Meta's PE ratio has fallen from 23x to 12x. It now trades at less than half the average PE of its peers. And so this
price to earnings ratio. Yeah. So
and
how much money you make times how much money you
times your stock price, right?
Yeah, your market cap. So you divide the market cap by So
what's interesting is that I think for a while people have been looking at that PE ratio, for example. They've been looking at Meta's declining stock price. They've been saying Meta still makes tons of money on its ad business, despite this weird metaverse distraction. We think this might be a buying opportunity. There's been a little bit of a slack in the system, right? I think let out we'll just see where it goes and and all of a sudden, apparently everybody's reached the breaking point all at once. And they're you got to pull it together, as evidenced by this open letter.
Yeah, this is something that's been brewing to give people a little sort of back channel on this, because, we're all in the same peer group. Bill Gurley has been talking about this for years. He's blogged about it publicly, so I'm not speaking out of school here, but we've all had a conversation since Google decided, when they figured out their money printing machine, they said, it's best for us, and we've talked about this on the show many times, Molly, to just hire every single person we can. Because we have so much cash. We have so much free cash flow, FCF. Why not just hire talented people and figure out what they're going to do later? So imagine a basketball team, like let's say the Lakers or the Warriors, were printing so much money that people were paying $1 million for season tickets, as opposed to, $50,000 or $100,000 for season tickets. Mm-hmm. And the sponsors were paying $1 billion to sponsor the arena. And there was just tons of cash there, and there was no salary cap. Well, what would be the logical thing for the folks at the Warriors to do? It would be to hire every single person. You'd say, hey, Kevin Durant, you're making $50 million a year. We'll pay you $200 million a year. And then you have Kevin Durant coming off the bench.
Yeah.
Right?
Yeah.
Or your 30th best player would be the CEO or would be the star player of the Lakers, right? You'd have LeBron coming off the bench, whatever it is. That's what happened in Silicon Valley with the talent wars. This was done explicitly by the Google team to block people from creating competitors, and Facebook followed suit. The number of employees at Facebook is truly extraordinary. There's 85,000 people there. And I think 3 or 4 years ago, he mentions in his letter there were 25,000. So you have to ask yourself, why do you have triple the number of employees? What are they actually doing?
Right.
And that's what nobody can figure out.
It was its very own catch and kill strategy.
Yes.
Scoop them all up, give them a de minimis amount of work, pay them plenty, and nobody else can get to hire them.
Correct. And so this strategy, though, in a down market, when people are like, why would I buy? I have other options with my money, and I got to think logically here. The combination of too many people and $10 billion a year being burned, incinerated on VR headsets on this crazy debacle, it's just weird. It's just like those two things together, I think, are what are depressing. And apparently nobody wants to own the stock. But this is Bill Gurley's influence on, I think, the peer group of, him saying And I think Uber, Twitter, and Google, a number of these companies are going to face something similar, which is why not be more profitable, buy back your shares, and maybe give a dividend? All of those things would be on the table to drive the share price up. All right, Linode startup program is called Rise. Like you want your revenue and your user counts to go up. And it offers more than just free credits. The benefits are, in a word, insane. You get up to $10,000 per month in year one credits, followed by a 50% and 25% discount for the next 2 years. There are no caps, and you get a lifetime discount based on your usage. Free 24/7, 365-day-a-year award-winning support. There's no tiers, and there's no handoffs. Cloud consulting experts ensure that your tech stack will scale seamlessly, right? Plus the community. Connect with other program members, the alumni, the advisors, and more. And shout out to Linode, which was recently acquired by Akamai. They've announced 12 new global locations coming in 2023. Their service is going to become even better as they plan to have 200 data centers across the world very soon. With Akamai plus Linode, you get access to leading security and CDN solutions, content delivery networks to make your site fast and resilient. Linode.com/twist, Linode.com/twist, and you can immediately try out Linode with $500 in free credits, no questions asked. And you can also apply to their startup program, Rise, which I suggest you do. Think about this. Rise members receive up to $120,000 in free infrastructure credits during their first year. And you get 50% discounts thereafter. Great job to my friends at Linode. Congratulations on the acquisition. Linode.com/twist.
Let's talk a little bit about what's in the letter. And then I actually do want to talk about this approach of an open letter because it's very interesting. It's very aggressive. Brad opens the letter by stating, quote, "I am sharing an open letter strongly encouraging Meta to streamline and focus its path forward. Like many other companies in a zero-rate world, Meta has drifted into the land of excess. Too many people, too many ideas, too little urgency. This lack of focus and fitness is obscured when growth is easy, but deadly when growth slows and technology changes." So as we mentioned, it's a 3-step plan to double FCF to $40 billion per year, including reduce headcount expense, like you were just talking about, by at least 20%, and take that number of employees back to a mid-2021 level. So not even, it's like the number of employees is up 3x from 25,000 to 85,000 in just the last 4 years. This is talking about getting rid of a relatively small number of those employees. Reduce annual capex by at least $5 billion. Meta has apparently gone from $15 billion in annual capex in 2018, 19, and 20 to $30 billion in annual capex in 2022. That is not inclusive, we should be clear, of the metaverse expenditures. Like that's just, the money they're using to acquire, upgrade, and maintain physical assets like property, plants, building, technology, or equipment. So he's saying cut that by $5 billion before you even get to metaverse, but also cap metaverse spending at $5 billion a year.
Yeah, I mean, they have so much cash coming out of that big machine known as Facebook. It's so profitable that, they can do things like build huge campuses. They can buy land and buildings. And then also, obviously, paying to make these headsets and then nobody using them. Yeah. And even though they're expensive or whatever, they're obviously subsidizing them a bit. So yeah, it's a lot of capex and it's probably largely unnecessary. And, 10% of 85,000 is 8,500 people, so you double that and you get to 17,000 people.
Right.
So 17,000 people, and Brad mentions this like, hey, listen, I know these are real people, but understand, and again, back to the sort of common discussion going on, he says, those people would go back into the startup ecosystem, they easily find jobs. So I know these are people with families in some cases and bills to pay. You don't really have to worry about them. So that kind of dovetails with maybe the unwinding of this catch and kill strategy, this, taking players off the market strategy. And maybe it's unnecessary to do that. And it would be better to take that money and maybe buy back your stock or give a dividend or just have more money and more profits, which would then make it more attractive to buy the stock.
He closes the letter by saying, quote, "We don't have any demands. We simply wanted to further engage and continue sharing our thoughts as an interested shareholder. We believe in this team. We know Meta has more reach, more relevance, and more incredible opportunities for growth than almost any platform on the planet." So here we are all familiar with the famous scene in Succession where Adrian Brody plays their biggest investor, calls Logan Roy to him, like ultimate power play, makes him go on this like crazy walk. There we go.
Yeah.
And I was like, you got to get the picture of him in all his layers and his like hoodie and stuff because his style,
layers are for players.
His style is not dissimilar to Brad, who in the few times I have met him seems to be a kind of a casual meme. Kind of a casual, oh dear God, we put his face on Adrian Brody. But so like that was a private meeting as portrayed in the movie. And it was or the show. It's a really big deal. It's like, I'm a huge investor and I have concerns. I have to assume, and I do not know anything here, but I have to assume that meetings like this must have occurred with Mark Zuckerberg.
Of course they have. Yeah.
So to me, what is really interesting about this letter is that it is being published in public, because that suggests to me that the Adrian Brody Clambake meetings did not work.
Precisely. Your assessment would undoubtedly be correct. So yeah, of course, these conversations have occurred. Management frequently meets with large shareholders. You got to take the temperature. Hey, because they could buy more shares. They could trim their position. So you want to at least know what they're thinking. And so all of the large companies know who owns, whether it's Altimeter or Fidelity or whoever owns large positions. I just want to check in with them. Hey, how's things going? And this is pretty much an activist letter. Now, it's not demanding board seats or demanding governance changes or demanding a change in personnel. It's just making some suggestions. So on the scale of like constructive private notes to activism, this is like somewhere in between.
Yeah.
It's constructive yet forceful public feedback. And now
pretty aggressive.
Yeah, so the fact that it's public, you're correct, is like 10 times more aggressive than giving it privately. But what it signals to me is frustration that the message, if you were going to game theory this, the message was delivered at the Clambake. The message wasn't taken, it was ignored. And okay, next step is we make it public. Now, the next step of this is we sell the stock and we clear our position and we're done. And then the stock goes down more because if large institutions are selling, that means who's buying? Retail, I don't know, other institutions, but you probably have a better place to put your money than a company that does not have financial discipline. It'd be better to own Apple, better to own Tesla, better to own Uber, better to own Microsoft. There are better options. And that's where the peer group comes in. If their PE is half of their peer group, what that says is just people are sellers of the stock and it just keeps plummeting down. So the question from here is, does Zuckerberg even care?
Yep. I mean, if he doesn't care in private, it's so interesting because I read this letter. You know me to be a bit of a cowgirl. And you've seen the occasional response that I have when I perceive that someone's trying to tell me what to do.
Sure.
And I am not going to lie to you. I had that response reading this letter, and you know me to be no Mark Zuckerberg defender here. But I read this letter and I was like, if I were the God King of my thing and I believed in my own genius and I was like, nobody understands that I'm making a long-term play, I would read this and I would be furious. I'd be like, this is short-term thinking. You're just following the crowd with this AI thing. I have a vision that's bigger than all of you, you fools. Like, it made me wonder is there an expectation that this will actually land in a way that could change the trajectory of the company? Because I would think get pissed.
It's part of a process.
Yeah.
It's part of a process. And so the next part of the process is, do people keep selling and moving their position out of Meta into a competitor, right? So that's the key issue here. If you look at this chart, you'll see Meta's revenue versus total operating expenses. And, in a tech company, these things, your operating expense should not grow in parallel with your revenue. In other words, it's a fixed cost business in some ways.
Right.
You should have a fixed cost. The more people who buy your software, like the next incremental purchaser of your service or product should not, if you get $1 more in software revenue for Canva, for Figma, for Adobe, $1 more in advertising revenue, you shouldn't see $1 in expense. You might see 10 cents or 5 cents, but you shouldn't see like a full dollar because you're giving something that's digital, right? Sure, you need more servers, but you don't need an exact amount to the revenue. Now, with something like
But now he's building an entire planet. That costs money. Right. You have to invest in the future.
Planet. It's a
if you're
virtual
building
planet.
A whole new entire world, universe even, it costs money. You have to spend money to make money, don't you? In a long term, I'm just saying, I think I could imagine the argument, even though I think you're totally right. I would be surprised if there was an expectation that Zuckerberg was going to see this, receive it in some way that he had not received earlier conversations in private and go like, yeah, you know what? You're right. I'm going to trim the sails here. I'm going to dial it back.
Well, now take a look at this chart. And this is looking at Alphabet, aka Google, Meta, aka Facebook. Nobody can call their service what we all call it as civilians. You notice that trend too? Like, well, yeah. I told you when
they changed the name, I was like, that's the biggest red flag to me ever. When you change your name as a company, you're screwed.
Yeah. So I'm just going to call this what it is. Green in this chart is Google. Blue is Facebook. The Facebook Corporation. I'm not going for your silly names. But if you look, you notice the light green to the dark green. You notice that gap between those two widens over time. In other words, they become more profitable, right? So there's their operating expense at $20 billion in 2022, and their revenue over at 69. It is quarterly. Now, Google's OpEx was only $20 billion compared to Facebook's $15 billion. Like a third more, 30%, let's say. But then you look at the top line, 28 versus 69. It's more than double top line. So that just shows you, like, in other words, for every $1 Google spends, they make more than 3. For every $1 Facebook is making, they're making 2. And so that's just where you see it's an operational efficiency. Now, of course, if you were to take out this, billions of dollars in salaries and billions of dollars in this investment in VR, you'd be concerned. Now, I can see this 2 ways. If you, as a shareholder, want to bet on the future and you believe VR and AR is the next mobile, then Facebook is doing something crazy, and they're not operating this business for efficiency. They're operating it for the future. The promise of VR is more important than the profitability of today. So buy the shares if you believe in that vision. If you are a cutthroat shareholder and you only want the shares to go up in value, then you would invest in a company that buys back their shares and operates purely for profit, or mostly for profit. Now, if you look at Microsoft and Apple, they do buybacks. I think Microsoft gives dividends, right? So you start to look at those two companies, they're saying, you know what, we're tech companies, we're growing at this incredible clip, but we're also going to give you a lot of value here in terms of how we manage this business and throw off cash. In the case of Microsoft, it's the dividend. In case of Apple, they do a lot of buybacks. And so I think this is why Warren Buffett is in love with Apple. And many people are in love with Microsoft. And in a down market, people are going to look at these fundamentals. It almost makes me want to make a J trade here.
this is what I'm talking about. Like there was something about this letter.
But
I know, like there was something about this letter that made me go like, hang on here. I don't want to be in this uncomfortable position, but they're making a long-term bet and they might be right. I don't know. One thing I did think was really interesting though, in the replies to Brad's original tweet was from someone who tweeted, Henry Avery, as someone who spends 50 million plus on ads annually, I can tell you they have completely neglected advertisers as of late. Their ad targeting went from the best in the industry to unusable and unprofitable. TikTok is superior. Zuck needs to be right about the metaverse or Meta is a zero. I would like to get somebody on to try to corroborate this opinion.
Yeah.
I don't know if this is related to the Apple changes or not, but this to me felt like a real bomb. Like it's one thing to say, because then there's no hope that that revenue line keeps going higher, right? Like the ad machine has been a money printing machine. That's just been unstoppable.
Yeah, what if that goes down? Now the gap between the two, those things, if that starts coming down and expenses have been going up, well, now you're going to become not a profitable company. You could become a break-even company or something. And then people are going to totally say, well, how does this valuation even make sense? I do think directionally, I've heard the same thing for my startups. And so field report is startups who are spending hundreds of thousands, millions of dollars, hundreds of thousands a month, millions of dollars, tens of millions of dollars a month on Facebook and Instagram to sell apps, to sell software, are telling me it's not worth it. It's not working anymore. D2C companies started telling me last year. Now, this is all because of the tracking that you can no longer do on phones because Apple, gave that headwind to the industry and said, you know what, you can't track people even anonymously on their phones. So that's a headwind. And should Zuckerberg be hiding in Burlingame by the airport in a virtual world, or should he be fixing these problems?
Exactly.
And if the leader is saying...
That's a real problem.
Yeah, I mean, this would be like me not showing up for the pod or investment team meetings. It'd be like, well, what are we supposed to take from this, right? Like when where the leader spends their time, that kind of signals something. And the focus level at Facebook on their advertising is horrific. All right, listen, this brand has a special place in my heart. The founders, Brandon and Carmen, are Twist listeners. They've been for a long time. And they told me they started this company, I kid you not, after listening to the pod and reading my book, Angel. Oh my God, that warms my heart. In fact, their first angel investment wound up being a big hit. What did they do with the money they made? They used the returns from that investment to start a macadamia nuts business. I am crazy. Happens to be my favorite nut. I love it with dark chocolate. And you can see this graphic on the screen. Not all nuts are created equal. This is why you need to get in on macadamia nuts. Compared to peanuts, almonds, cashews, and walnuts, macadamia nuts are higher in omega-7s. That's what's been linked to fat loss and natural collagen. And they have more healthy fats. They also have less carbs because, listen, I'm trying to lose a little weight here. And the product is vegan, keto, and paleo. Take it from me. I eat these macadamias all the time. They're totally delicious. And I love the bars. They have spicy ones. They've got dark chocolate covered ones. Here's what I want you to do. Here's your call to action. Get in on macadamias. I'm all in on them. houseofmacadamias.com/twist right now for 20% off just for being a listener. The nuts are delicious. The bars are amazing. And of course, the dark chocolate dip packs are my favorite. houseofmacadamias.com/twist. Let's take a look at one more chart here. And this is critically important. So now we're looking at Google and Facebook's revenue, right? That's your top lines. The big green line, $69.69 billion for Google last quarter, and then $28.8 billion for last quarter for Facebook. Okay, there's a lot of money. Now let's look at the capital expenditures.
Yeah, they're almost at the same. For those of you who are not watching.
Yeah, we're looking at charts here. Yeah.
Yep.
The blue chart, the dark blue, it turns out Meta is spending more on capex to make $28 billion. They're spending $7.5 on capex. And Google's spending but $6.8 billion to make $69 billion. This would be as if Google, if Google's making 2x more, that means Google would be spending like $15 billion on capex if these ratios were the same, but they're not. In other words, they're more efficient.
You know what's bonkers about this is that we're actually talking about Alphabet. Like we're being snotty here, but it is relevant in this case that we're talking about Alphabet because Alphabet makes hardware. Alphabet has multiple divisions. Alphabet has exactly X and Waymo underneath it and is still spending less on capex.
They've controlled that.
They have controlled that. And Meta, I mean, that's where you do really see, I think we're talking ourselves out of your J trade, by the way, because this is a stunning lack of discipline.
Which is why, Brad is, I guess probably at his wit's end. I think, the next thing is he should just take the loss and sell his shares. I think that this is...
I think so too. I don't think this letter gets him anywhere.
I think this is like last call for him. He's like, okay, listen, I'm a loyal patron of this restaurant, but if you don't fix the food, I'm out. You don't have a restaurant you love and you've been going there for years and then it goes downhill and you're just like, oh, the service is terrible now and my food came out cold. And at some point you just give up and you're like, I used to love that place. But
do you tell them or do you just walk though? This is where I'm still trying to figure out what
you tell them if you care. You tell
the letter about being nice. I guess if you have a relationship and you've been, but
you're a regular.
It's a little bit of a Yelp post though. That's the right again. There's the private conversation versus the Yelp review. Brad just posted a Yelp review.
I'll do that. That's who I am too. I'll do that too. I will tell the manager.
It's harsh.
Hey, listen, I love this restaurant.
Yeah.
My food came out cold the last 2 times. The service has been dismal. It took for a long time for it to seat us. The drinks came late, whatever it is. I would tell the manager, I'd tell the owner if I knew them, if I was a regular. And then I'm in fact like a bit of a Karen. If I gave something a 4 or 5-star review on Yelp, and then it sucks, every quarter I get an email because I was Yelp Elite for a little while, which makes me feel good. Every now and again, they're like, hey, rate these restaurants. I'm like, you know what? That's my civic duty to do that as a foodie. And I'll go rate them. And I will change my rating. I will go back and I'll say update. And I'll edit it and I'll say update. This was 4 stars. It's now 3. Here's why. And maybe I'm a Karen. I'm screaming into, what's the male version of a Karen? Is it a Ken?
I think it is such a sexist, stupid term anyway. So I don't know. I guess it's a Ken.
A Ken. It's a Brad.
Just be a Karen.
I'm a Brad.
Just take the gender. You're a Brad.
That could
amazing. Amazing.
Yeah.
Just
Brad
take gender.
Karen on him.
Just take it. You know what? Karen could be a gender neutral term. You could still be a Karen.
I think it's general neutral. Yeah. Well, I have this. Dark web signal group.
Update. Yeah.
I have a dark web signal group, and they are going wild with the Brad and Zuck memes. You saw that first one with him as Adrian Brody from Billions, the clam bake.
Succession.
But here's another one that came up. This is the classic Superman making a decision of what to do.
Never gets old. Never gets old. We have our 2 buttons in case you're, again, if you're not watching on YouTube, you probably should be youtube.com/thisweekend. But here we have the classic Superman dilemma. On the left, we have the shareholder value button. On the right, we have personal pet project. And then we have a sweaty Zuck just stuck, doesn't even know what to do.
Yeah. Or this was my favorite. The old Kylo Ren from the terrible Star Wars films when he wants more power. And it's Brad Gerstner saying, more free cash flow. more. All right. Well, speaking about mismanagement.
I hope it works, but if not, Brad, just sell. Just walk away.
Speaking of mismanagement, you remember the Fyre Fest, right?
How could we forget?
That kid's out of jail, by the way. I can't wait to see how much money Andreessen Horowitz gives him for his next idea.
I was say that. I'm so glad you said it and not me. You're already blocked. I'm just unfollowed. I'm still skating the line.
That's the process with Mark Andreessen. He unfollows you, then he blocks you.
Yeah.
But he'll be back. I'm convinced he'll be back. Fate loves irony. So Fyre Festival was on an island in the Bahamas. It was a disaster for those of you who didn't see the 2 competing documentaries. Both documentaries have something to offer. I highly recommend both. But yeah, if you paid thousands of dollars because the Kardashians/Jenners told you to do it and they never showed up and they got paid $50,000 or something to tweet this BS, they are now taking the island that Billy McFarland christened for his luxury con artist, Billy McFarland, I should say. I mean,
so
con artist, Billy McFarland, back in 2017. I mean, this is becoming ancient history now. They're going to make luxury crypto condo community? What?
I mean, okay. So apparently a company called AGIA International, and we really need to do some proper Columbo here on whether Billy McFarland is associated with this operation or not, is claiming that it will sell, quote, 60 ultra luxurious pavilions and villas ranging from 1,000 to 6,500 square feet on this island. We do not know, by the way, anything about this company. We cannot find anything more than a website, but it seems to have, it doesn't even seem, it is only purchasable via NFT. So you can only buy this property. It will be the only community, quote, strictly sold via NFTs. According to the website, residents will be hatched $10,000 to get on the allow list. And homes are expected to range from $1.5 to $5 million. So they've just gone with the complete lack of irony that you might expect from the crypto community. They're just repurposing without comment. And in fact, even saying, yes, it's, I don't know that they're bragging about how it's the site of the Fyre Festival, but without comment, they're repurposing this island, site of the biggest debacle in recent influencer memory, and turning it into basically like a crypto influencer island slash shell company.
There's nothing sketchy here, but apparently you pay $10,000 for an NFT.
Just to get on the list.
That gets you on the list to buy homes for a couple $1 million.
No, all you get there is the right to mint, the right to ownership NFT.
Got it. Okay.
Yeah.
So that couldn't possibly be a grift. I've never heard an allow list price. What is an allow list price? It's like you give me $10,000 and
you give me $10,000 and then I let you. It's like a per seat license thing. Totally. That's exactly what it is. It's the right to buy it in the first place.
Well, anyway, listen.
Anyway, don't do this.
I would advise people to, if you're doing a real estate community and NFTs are in any way involved, that's a big red flag. And then if Billy McFarland is involved, it's just like every red flag in the world waving at you.
We don't know that he is. We have no idea.
We don't.
And we literally have no idea because you can't find anything more than a website and a LinkedIn page with 8 followers and 2 employees about this entire company that's showing these incredible renderings of like beautiful houses with infinity pools that are definitely going to be built there because nothing has ever gone wrong there before. I mean, I don't know, man. But okay. It's your 10K. You know what? It's your 10K. And if it turns out Billy McFarland is behind this, I will not be in the slightest bit surprised.
The bad news here is for the people running this grift, and it feels like a grift to me. That's my personal opinion. That this would have been, if it is in fact a grift, the perfect grift for 2020.
Yep.
If this was 2020, 2021, this grift would have just gone supernova. I mean, they would have sold all. It's a really good call. Just timing's everything, folks. If you're going to do a crypto real estate grift in 2022, when people's portfolios are down 20, 30, 40%, you might not find too many buyers. Like they may want to buy Amazon or something. Yeah. They may not want to buy your shares in your NFT grift, but whatever. I mean, if it is a grift, I don't know. Feels grifty to me.
You never know. You never know.
Yeah. Right.
But if I was just going to buy like a really fancy house with an infinity pool on an island, I maybe just would want to use money.
Yeah. Listen, founders, very important. If you're in SaaS or you're in services and you store customer data in the cloud, you need to be SOC 2 compliant yesterday. And you might be hearing this and you may not even know what SOC 2 is, or maybe you heard about it. You know you're behind the 8 ball. Let's get this solved today. This week, I want you to be compliant from a third party so that you can close big deals. Do it now. Do not look like a dope when you try to close a deal and they're like, do you have SOC 2? And you're like, that long pause, that's going to be the sound of them going to your competitor. Use Vanta, which makes it incredibly easy to get and renew your SOC 2. On average, Vanta customers are SOC 2 compliant in just 2 to 4 weeks, and compare that to 3 to 5 months without Vanta. And they partner with over 24 audit firms who have been trained to file SOC 2 reports directly within Vanta. I was able to invest in Vanta. It's a great company. A bunch of my portfolio founders have used Vanta. They've had amazing experiences. They give it their highest rating. And let's just be clear here. If you're not SOC 2 compliant, you can't close major customers. It's that simple. It's one of the first things they're going to ask for. Here's the best part of this ad read. Vanta loves This Week in Startups. They want to support founders, and they want to support founders early. And they don't want you to break the bank. So they're going to give you $1,000 off. Think about that. Get $1,000 off at vanta.com/twist. vanta.com/TWIST. $1,000 off vanta.com/twist. Get your SOC 2 now. It looks like there's a Divvy Homes hit piece in Fast Company. We'll have to have Adena come on and talk about it, but I thought I'd just cue it up. Mm-hmm. And so this, I'm almost reticent to go after this story right now because I don't see Divvy has responded to it. So I guess the question is, do we cover it now?
I don't know. It does feel like sort of
one-sided, right?
It feels one-sided.
And a misunderstanding.
Exactly. I mean, I think the only reason we brought it up is because it feels really one-sided, and maybe a lady CEO hit piece in disguise, and I don't know, we like it. But yeah, maybe we should just wait and see how this shakes out a little bit before we give it more play. Yeah,
I mean, because we have access to Adena, so we can just have her come on tomorrow and talk about it, as opposed to... All right, so let's do this. We can leave this in the show, that there was a hit piece on Divvy Homes in Fast Company. We've read the article. We have the notes, but feels hit piece-ish to us in our judgment, right? We both agree?
Yeah, it does, actually. It's a pretty snotty piece. It's got tone. Yeah.
It's got a tone, and so we'll just make a little bit of, we'll call an audible here. We're aware of the story. Instead of detailing the story now, let's ask Adena to come on tomorrow or the next day, and we'll detail the story and get her response, because she's a friend of the pod. So Nick, leave this in the show, Molly and I making this decision, and then open invite to Adena to come on the show in the next day or two, or send us some notes. And then we'll cover it then when we get her side. We'll make it, it's like being editorially fair.
Right.
Yeah. Which the story doesn't feel.
It doesn't. No, it does not.
It does not feel. This is the thing. When you have one bad customer review and then a journalist decides to make that the focus of a piece, I always find that quite unfair.
Or even 100, right? It's in terms of scale.
Right. Depends on the denominator, right? 100 out of a billion.
Exactly.
Means nothing. 100 out of 500 means something. 1 in 5, right? So there is some point at which a bad review counts. So yeah.
Right.
Or number of bad reviews.
It's not.
But this doesn't feel like
this
it.
had a very I don't know. It had a very cannon fodder feel to it. I did not care for the tone personally.
Felt like a hit piece. And
felt like a hit piece.
And we believe, I speak for Molly on this behalf because we've both discussed it here. We believe collectively that women are getting hit pieces on startup founders who are female are getting hit with this bullshit, this BS, harder than men are. The bar for a hit piece for a woman is like, I told somebody to do their job, that I'm paying them for.
And it's never accompanied by... I mean, listen, this is, and we will talk about this, it's a hard business to be in. The human elements are real. And when things go wrong, they can go very wrong. And it can be a big bill attached and a very disruptive situation for the humans involved, right? It's tough business.
Because it's people's homes.
Because it's people's homes. And also, as soon as you get to the part in the story, and I was just waiting for it, line by line, where you bring up the founder by name. And you talk about how she likes to use her history, and you make a little side swipe at her Ivy League education. Then it's just okay, here we are. Here it is.
Here it is, yes.
Here it is.
It got personal. When it gets personal, that is like a huge tell that the person who wrote it maybe has some issue with the person. Now, that is actually a really interesting point.
But it's just there it is, right? If you I just want to go back. I even started this morning and of course ran out of time because we had a show to do, to look through all the Fast Company archives, recent stories. Show me a story that's just a hit piece on a company and its business model that doesn't have this kind of personal.
Yes.
As soon as it does, I know that there's a woman CEO involved. And it's not to say that women CEOs can't screw up, but it's just they can. The cadence of the hit piece on the lady CEO is about every, 10
and
to
then,
18 months.
The next thing is going to be, you can always tell and they're and she has her nanny. She has her 2 nannies with their baby at the office and set up a playroom for a kid at the office. And it's because she's a mom and she's taking care of the kid and she's got means to have a nanny. And the dad, I go to work. Of course there's nannies here taking care of my kids when I'm at work. What do you think I'm doing? I just throw them in the backyard? But nobody would ever say like, oh, venture capitalist Jason Calacanis brought his nanny with him to a speaking gig. You know, like when I go to a speaking gig and I bring my kids or, you know, or something, I'm at an event with my kids. Yes, there's 2 nannies with us, 3 kids, 2 nannies. Yes. Yeah, okay. I have some amount of means as a CEO founder. Yes. And I'm not carrying my kids with me, but I might bring a nanny. But a woman brings a nanny. Oh, that's got to be in the story. That's part of the hit piece. You know, it's just a double standard. It's a BS double standard.
It just is. And this is and because this is such a snarky piece, like snarky, right? It's like that you can't, that frankly, we'd just rather have a conversation with her.
I'll go straight to the source and say, yeah. I mean, this reminds me of the Away CEO one where she gave the big speech. It has
that same tone where it's just
same tone as the Away piece. Yeah.
Yeah.
And then in the Away piece, they're like, she's white, and the people who are in this industry, you know, in this group were people of color, and it's just like, what are we even talking about here? Like, what does that have to do with anything? Like, she said to the people who are working in the department that does customer support to work harder during Christmas because that's when we sell most of our stuff. Like, everybody gives that speech. Hey, let's go, everybody. You know, Amazon gives that speech. Bezos gave that speech countless times. Hey, it's go time. It's Black Friday. It's Cyber Monday. Let's go, team.
Even like, we're not here for work-life balance. It's go time. This is our busy, right? Like all of that is just within it's just like, it's so, It's I mean, cloaked claims. It ends with like, Divvy is happy to be your landlord indefinitely. I'm sorry, what? Like, it's not, it's I
think they're happy to have you as a customer either way. If you buy the home or your landlord, it's a hit piece.
Yeah.
It's a hit piece. You know, I tell people straight up, you've been in the meetings. Hey, if you're going to work for me in an investment company, fixed 50, solid 60. I'm referring to the hours per week. Why do I say that? I literally, we had our offsite. I was working on the culture. And I was like, listen, don't work here if you're not willing to answer the phone if a founder calls on Saturday night at 10 p.m. and get out of the movies and go handle that situation. That's what we do.
Yeah.
That's what we do. This is not a 9 to 5. You know, the end. Don't work here.
Yep.
Yeah. I don't
see you getting dragged in Fast Company.
Exactly. Drag me for saying that?
Yeah. I don't see you getting like
finance.
Literally compared. She is compared in this piece back to back with predatory lending contract purveyors in Chicago who stripped Black families of $3 to $4 billion in household wealth during the 1950s and 1960s.
I mean, come on.
Like literally, it's like. So Hefets and her co-founders are doing this. And before that, there was this thing.
Yeah.
So same, right?
Same. I mean. And before I asked people to work 50, 60 hours a week, the great pharaohs in Egypt demanded that people carry stones on their backs up to the pyramids, you know, for 80 hours a week, 7 days a week. Just like J-Cal. And the pharaohs who built the pyramids and forced them
modern
to push
day pharaoh.
Yes, it's super analogous, right? Like literally, like the 1960s. I mean, they really that's a deep pull.
Take concerns. Have all the concern you want with the rent to own mod, right? Like you can write a piece that's like, is this the right way to incentivize homeownership? Sure. And is homeownership such a goal that right? None of that is. This is not that. This is not that piece. This is J-Cal is just like the pharaohs.
I love this sentence.
Which, by the way,
advocates
is my literal new favorite thing.
Advocates, you know, just advocates.
I like how we said we weren't going to talk about the story, but it is that freaking egregious that we cannot stop.
Whatever. I mean, this is the world we live in right now. There's a group of people who are doing real. I mean, I defended this on All In when people were like, journalism's dead. I'm like, no. There's just content creation and journalism sitting next to each other. And there are people doing unbelievable journalism.
Yes.
There are important groups at the Boston Globe, the New York Times.
I love how he was like, you can look up any event. He's like, you can look up any event that happened in the world. I'm like, where do you think you're going to find the story about that event? Like, come on, man.
Journalism is alive and well, and there are incredible moments of journalism happening every day, every minute. People deserve Pulitzers. They deserve raises. They're doing investigative pieces. There are independent journalists doing Substacks that are crushing it. Amazing. But also next to it, as you always say, and there's content creation. And then there's content creators who are compensated based on clicks, traffic, and followers. In fact, when I was looking for a co-host to join me here, Molly, one of the reasons you were on the top of the list was not just how good you are at your job. It was that at the time you had 100,000 followers on Twitter. And I said to myself, well, if I'm going to bring somebody in here, it would be nice if when they tweeted about the show or that we're doing something, that maybe somebody would show up. In other words, they had a following, right? Okay. When you hire The Rock to play Black Adam, just as a little bit of a callback, you do that in the DC universe because you know you're going to bring a group of people to the DC universe who might not have been there before.
Exactly.
This is a specific play they made. They wanted a mass audience who watched Fast and Furious because he's part of that franchise, correct?
Yeah, bro. Hello.
Okay, I've never seen one. I've never seen any Fast and Furious.
You haven't even seen the awesome spin-off Hobbs and Shaw, the most fun movie ever?
I've never seen any of these. Okay.
I'm derailing.
So anyway, I know that he's involved in that. And I was talking to, is it Michelle Rodriguez who's in that?
Yeah.
Okay. So I know Michelle Rodriguez.
It's like there's only one 14-year-old boy on this show.
Okay. Well, anyway, I know Michelle Rodriguez, a friend of a friend, and I've had dinner with her, and I sat and had a long conversation with her about the Fast and Furious. And she said to me, J-Cal, this is the most international movie franchise in history. Chinese people, Korean people, African people, Europeans, South Americans, blacks, whites, everybody in between has some representation in this, and they're drawn to it. It's never happened before. This is, because if it's an ensemble piece, she explained to me, you're bringing in all these different
and they
superheroes.
Had a whole movie set in Tokyo that everybody wants to.
Okay, great.
Tokyo Drift. Okay, yeah.
So there was some conscientious effort for, dare I say, inclusion in that franchise that brought everybody in. That's what they're doing with The Rock, right? You're bringing in to have more people in this.
It's a big tent. They even call it. It's a big tent strategy. That's literally what it's called.
Anyway.
Yeah.
Yeah. And so, but this is also when they have the advocates, they bundle together a group of people's opinions, but without people's names. This is when the content creators, opposed to journalism, it's a little bit lazy, right? Like if you really want to go for advocates, just give us five different people's names. Name three. I think for me, I always told my people, bring me three. Yeah. If you just so it's not like you cherry picked. Give me three. So if there were problems, at least three people had the problem. And if there are people who have an opinion on this, let's get three people on record. And no, I never like these anonymous source things.
Name a study. I have had many editors.
Sure,
I have literally had editors be like, if you're starting your sentence with experts say, start over. And that's what this is.
Which expert? Yeah. Right. So the point being, people are now hiring based on Black Adam hiring, DC Universe bringing in The Rock. That's part of journalism now. It's these super journalists who have big followings. How do you get a big following? Well, we all know how you get a following on Twitter. It's by picking a side, right? Joining a tribe. This is kind of like the playbook. And I feel like this is a little tribal,
Well, beating up on tech is 100% a playbook too, right? It's
yeah, sure.
Find the thing that, and again, this is why I brought up that housing touches a lot. It presses a lot of buttons, right? Because it does get to inequality, and it does get to
there is inequality.
And there
in housing.
has been a history of predatory lending, and the rent-to-own model has had a lot of scrutiny. And there are so many ways to do that story that do not feel this. Snotty. I mean, I know I keep coming back to that word, but that's the tone here. It's borderline.
Tone matters. Yeah, tone matters.
It matters a lot.
Yeah, it doesn't feel objective.
Not feel, no, come on, not in the slightest.
But listen to this sentence. Advocates caution that modern implementations of rent-to-own models have the potential to be just as exploitive as past incarnations. I mean, that's a lot of word salad to say nothing. Okay, you're saying rent-to-own models, past and period, the new ones could be just as exploitive as old exploitive ones, or said another way, they could be different and not be exploitive.
Right, exactly, or not.
So I could say, advocates and experts say that modern implementations of rent-to-own models could be better and solve the problems of past incarnations. You literally could say the same thing. You could talk to advocates for this and say, yeah, this could be better.
Yeah.
But that doesn't help anybody to just put in a biased sentence like that. Advocates caution. What does it even mean? Which advocate? If you and I were editing this piece, big red pen.
I'd be like, show me a study.
Show me a study. Sure. Yeah. Studies are good. And studies are not perfect either, but you're trying to triangulate on the truth. And word salad does not get you any closer to the truth.
Yeah. There could be real problems. Again, there could be real problems. But there is not a lot of proof in here. There are outlier stories about things that went wrong. And there are always things that go wrong in a company. But as soon as you're like, in other words, they're happy to be your landlord forever, and so on and so forth, right? Particularly galled by Divvy's attempts to shirk responsibility in the name of, like, it's just like, okay. Anyway.
In breaking news,
we don't like
advocates caution that people working for Jason Calacanis should work no more than 40 hours a week so that our returns can be industry standard. and no better. Advocates do caution that. Advocates do.
Advocates for doing just fine and no better. Yeah. Anyway, so Adena, please come on.
Yeah. I mean, Adena will come on, I'm sure. I mean, also, like, I believe her when she said she wanted to help this group of people. Like, we've had her on the pod multiple times, and then she spoke at All In Summit. Like, there's a group of people who can almost own a home, and they might want to, select the home, buy it with the help of Divvy. Like, that's the group we're talking about here. Now, is it possible that some of them maybe overreach? Sure. What's the harm? They pay a little extra.
There's real harm, and they overreach. And it's like,
and Divvy's on the hook, though.
And it's not necessarily Adena's fault personally, and nor does it warrant, I just looked up 5 stories about BlackRock buying a bunch of single family homes. Nobody's named here. Nobody's origin story is named here. There's no around the time that Larry Fink at BlackRock decided that the total addressable market for single family homes that could be rented out at an exploitative price, right? Like, he's not in here by name. And BlackRock is taking millions of homes off of the market every year.
I mean, look at this weird sentence in this story. This is from Catherine Bracey, co-founder and CEO of nonprofit advocacy group Tech Equity Collaborative. I'm sure she's got great intent, but this is the quote. I'm trying to understand this sentence too. The real danger is that the incentive structure around venture capital supercharges these models, and then the people who are building the companies don't have the historical context to understand when they may be replicating something that has created harm in the past. So they're saying Adena, who went to an Ivy League education, spent years building this business, doesn't know the history of rent to own? Is that what she's saying here? Because I've met Adena, I spent time with her. She's brilliant, and you're sure that she has studied this. She might be one of the biggest experts in the world today on rent to own, and you can be sure the venture capital is giving her funding. I mean, this is a unicorn company. You can be sure they understand the history of this, and they've studied it, and they've modeled it. So it's kind of the opposite of what this person is saying.
Right.
Of course, they put the may in there. Right.
She's got that master's in business from Stanford. And listen, again, maybe not. Right? Maybe not. Maybe there is some universe, and we should always allow for the possibility, in order to be as gender neutral and objective as possible, that maybe she doesn't know the history. But there's no sign in this article that she's been asked directly. And the assumption throughout is that she is essentially on equal footing. She personally, and I want to make this clear, right? They're not saying the company. The assumption throughout this article is that Adena personally is very likely on the same level as all those predatory lenders in Chicago in the 50s and 60s. Don't print until you have her. I'm sorry.
Yeah. I mean, and maybe talk to... This is so lazy because there's a really easy thing to do here. This is my note as an editor, because I was an editor-in-chief and publisher. Started my own magazine. Started countless blogs, including Engadget, Autoblog, Joystick. These are very famous blogs in their industry. I would just say to somebody, get me 3 other Divvy owners. Go on a Reddit subforum. Go on Craigslist. Tweet. Does anybody know anybody Divvy? Go find me more Divvy owners and let's talk to them. Or you say to the company, hey, can you put us in touch with 3 owners? We'd like to talk to them. I mean, that's another way to go. You just basically spend one more day. I would say one more day on the story. Get me other owners of Divvy Homes. But, a lot of journalists, Molly, have to file daily or every 2 days or twice a day. And so this precludes them from doing work. And that's part of the problem.
This is under the long read tag. So presumably there was more time.
So then if you didn't spend the time, what would that tell you?
It basically... Yeah, that you want to get it out and you want to get a bunch of clicks for your hit pace. At this point, because there is such a long history of pieces like this being aimed quite particularly at women CEOs by name, and having the same kind of just a little over the top tone.
dramatic.
I'm to the point where I no longer take it seriously. Like, I'm just like, yeah, I actually don't believe you. You have created such a culture of bad journalism that now when I read this piece, I don't believe you. I just reflexively believe Adena here. Because your tone is that not objective and your history is so poor. And I mean this as the general journalism you, not this writer in particular.
Yeah.
Anyway.
All right. Listen, I think that's enough show for today.
That's enough show for today. I know. Shake it off.
Well, I mean, it's a little bit frustrating, but it is what it is. I think just whenever you're reading these stories, we're just trying to give people a little education on how to understand if you should believe what you're reading.
Yes.
Anonymous sources, experts say, this sort of bombastic stuff, personally attacking the founder. When you start seeing those things, you got to wonder about the agenda of the piece. Now, we used to live in a world where we didn't worry about agendas, right?
Yeah, totally. But now we worry that, and we don't even worry it's true. There was like a Paul Graham tweet the other day that was citing some data about headlines over the past 30 years and showing that they have gotten quite notably, like empirically, more outrageous and angering. And I mean, we really are. I was looking up the history of yellow journalism and the law, there was that whole journalism trend in the 1800s that led to all the libel and slander laws that we have today. Yeah. Because the goal of journalism at that time was to inflame and enrage. And there were even those who suggested that it contributed to America getting involved in a war. And I can't remember which one, but it was literally it felt like a mirror of this moment, right? It was like the march toward war. Anyway, yes, headlines suggesting fear, anger, disgust, and sadness. And this is that type of story where it's like, if you read this and you find yourself getting mad and horrified and outraged and thinking to yourself like, oh my God, Adena, Hefets is a predatory lender, just like Chicago in the 50s and 60s. There's a reason you feel that way. Yeah. It's the writing.
They literally used every device possible to make you feel that way. Yeah. These experts and advocates told you to feel that way because they're experts and advocates. And, these are just little journalism tricks.
The Spanish-American War.
Yeah. And remember, why were they doing this kind of outrageous headlines back then? There were political agendas, of course, and they also wanted to sell papers. If you walk by a paper, you see an outrageous headline, you're like, okay, I'll give a nickel to read the story on page 6 about that. I'll jump ahead and try to read the story. And if you pick up the newspaper and you go to page 6 and you start reading, the person says, hey, you can't read here. This is in the library. Give me the nickel. Right? Yep. Like kind of a famous scene. It's the same thing here. Give me the click. I want the click. I want the eyeballs. I need your attention.
And this was
a crazy headline. I need your click.
There were 2 major newspapers, and the publishers were Joseph Pulitzer and William Randolph Hearst.
Yeah.
And the competition between the two were so fierce. I went and looked this up because I was like, this is not the most polarized that the media has ever been. But I came across this story where it was like this extremely sensationalist style, and the profit-driven coverage of world events got so intense that it arguably, in part, led to America's involvement in the Spanish-American War.
Yeah, that's a good pull. Well, and then this is why podcasting is
This is what a nerd I am.
Well, podcasting...
Actually, if you look at history...
I've read a book on the history of journalism. No, here's the thing. I'm going to take my retainer out for this. I think this is part of why podcasting is surging as a way for people to get the news source, because it's nice to listen to stuff, right? And then you build a relationship with people you trust. You get to know them. And people say, okay, Molly was a journalist. Jason was a journalist. Okay, they invest in companies. They got a good 360-degree view from all sides of the table. Jake House built companies. Molly's investing in companies. She's been a journalist. Okay, like maybe when they break something down, I'll get more out of that than I will just from a journalist or just from a venture capitalist doing a post or just from an expert doing a post. You kind of can find people who have a range of experiences, get into a rhythm with them, trust them. And that's what I encourage people to do. You find some sources in podcasting you feel you can trust, and then that becomes like part of your editorial mix. I'm not saying the only thing.
Yep.
But part of it, it could be a nice piece of it that, you can then build off of. And I think this is why you're seeing this surging level of interest in podcasters and podcasting. Because a certain person, Molly, works as a podcaster. I think you have to have an intellectual honesty to build that trust, you have to be willing to be wrong, right? Sometimes we're wrong about things.
Yes.
And you have to have some broad experience that people say, you know what, I'm listening to this person's voice. I get it. They know what they're talking about. Okay, Molly's invested in companies now. She's been at the New York Times. She's been at NPR, whatever marketplace, public radio. You collect some experience in life, and then this is the unique thing about podcasting. And you have time.
It is. You have time. And honestly, you have the ability, you are rewarded for critical thinking. Like it shouldn't be, if anything, I think you should consider it. Apologies to all of my former employers. You should consider it a greater credential that I left those places. That like at some point, the commitment to critical thinking overrides what your editors want you to do. And I think you see journalists leave for those reasons. And there's sort of a certain code for people who have left various places. And it usually said, it usually breaks down to, I wanted to be smarter than this. Because journalism is mass by definition. And a mass audience usually wants to get mad about stuff. They want to get mad. They want to get sad. They want to be entertained. Sex does sell. If it bleeds, it leads. Like all of that is just true about any mass medium. Yeah. And we have, we have this like beautiful opportunity to cultivate smaller, smarter slices.
Yeah. You can be more thoughtful. I like this sort of thing here. You can be more thoughtful, and you're rewarded for critical thinking as opposed to penalized for it. Because, and this is where I think journalism has a structural problem. If you were to write a headline here, Divvy Homes is attempting to make a better rent-to-own model. Would not be clicked on, and it would not release the dopamine of the outrage that you get from this piece.
Right.
So the person who wrote a more accurate headline or a more accurate story or a fairer story would not get people as charged up. Now, when people get charged up, what do? They retweet you. So this is a very nuanced point. There's no reason to retweet an insightful, thoughtful, critical thinking piece. It's not like, if you heard our discussion here and you thought, well, that was thoughtful, your first point isn't, I need to retweet that thoughtfulness. Wow, that Molly has really broke that down with some critical thinking. Now, if we were upset and angry, oh my Lord, here we go. This is retweetable. It's a fight. It's an argument. I have to pick a side. I'm a Republican. I'm a Democrat. I'm whatever, a coastal elite. I'm a redneck, whatever it is. And you feel your tribe's been wronged. Yeah, you get that retweet action. What does that do? It increases audience. So
you also get content. You get to create content and potentially get attention for it. And to Francis's point, I think I agreed that in some ways we are being I agree with you. I am being dismissive of the serious issues in this piece because this piece is written in a way that makes me want to be mad about the serious issues in this piece.
Yes.
Instead of laying them out in a reasoned way with enough expertise behind them, with a fair treatment of the founder that I believe that I have engaged, right? Because again, I have acknowledged over and over in this conversation, this could be true.
Sure.
But because of the way it is presented to me, because it's like, what could possibly go wrong? Silicon Valley owns the American dream. I'm on my heels. I am defensive because this does not feel fair.
Right. Well, you're thinking, now you've gotten to this metacognition level, and anybody who's spent time in the media machine has this, where you're like, okay, what happened in the Star Chamber when they were discussing the headline? Who wrote the headline? Did the author write the headline in the subhead? Probably not. Who wrote it? The social media group who's really good at this stuff. And then what was the editor thinking? The editor might be thinking, we get compensated based on our page views. We're behind Business Insider. Business Insider's writing crazy headlines every day. They're writing crazy headline pieces and trying to get you subscribed for 99 cents so that you then get billed $10 a month. Their game, right? Yep. They're like, let's write something outrageous about these 20 people, make a listicle of 20 people, get people outraged and get them to subscribe because they can't get it anywhere else. Put it behind the paywall. There's all these games being played. And once you've been inside the machine, you just see them. And so hopefully the audience here, we've helped you see when a piece feels biased. Again, to Molly's point, could be true.
Right. But J. Cal and I know what it looks like.
Yeah.
when, right? Like we know what it looks like when
So
something
obvious.
is designed to get a specific response. This is our specific expertise as former journalists and media purveyors. And this is that kind of piece.
It's totally that kind of piece. And it could be changed so easily. Yep. All you had to do was talk to two people who love their Divvy Homes.
Yeah.
Talk to somebody who actually was an expert on predatory loans, who actually could explain to you the contracts that people signed in those predatory loans, and then pulled out the paperwork and the document that Adena makes people sign for Divvy, compared those two, and then asked Adena about those specific changes. So that would be the way I would do it. I would find the contract that people in the 50s, 60s signed that was predatory. That contract exists somewhere on the internet. We probably would find it in 5 minutes. And I'm sure Adena's contract with homeowners is available either publicly, or this disgruntled homeowner would have given it to you. And then you could just pull it up and say, well, this person knew that they're responsible for making sure that, the stuff in the house is replaced,
Right.
Or whatever.
And talk to the inspectors and exactly. Like we also know what it would have looked like if it had been done right. And that's why we're fired up about this right now.
Yeah. But anyway, we'll have Adena on. And all right, it's a big week this week. So thanks for tuning in. Earnings season is coming. So we got Google, Microsoft, Spotify reporting tomorrow. And I am a shareholder in Google. And I think I J-traded Microsoft as well. So
I have Google and Microsoft in my portfolio. So I'm excited to see what this. I don't know if I have Google. Do I have some Alphabet? I will find out. I definitely have some Microsoft.
Yeah. I mean, I added Netflix. I added Netflix. And but I was thinking about buying Microsoft because of the Netflix. So that would have been a pair trade there. And I haven't bought Spotify yet. I'm a little concerned about Spotify, but maybe this would be a good chance for me to think about those and do a little rebound. My portfolio is coming back. The gain and loss has trimmed. It was a little dark there during the real down market, but I'm only down 10% right now, which I am fine with being down 10 or 11% because I'm building this for a 10-year. My biggest gain right now is Adobe. My biggest loss is Disney, and on a cash basis, not a percent basis, because I bought so much Disney. But I still feel pretty good about Disney. I'm actually thinking about buying more Disney.
What are we going to do about that Warner Brothers? What are we going to do with that? Ooh, Taiwan Semiconductor. Ouch.
I might buy more. Yeah.
Yeah.
Well, that's the headwinds of the global chip war.
I mean, they're going to get invaded, so that could be a problem.
It could be a little bit of a problem. Yeah.
I come on this show and I keep it together, and then I go back to my life and it's all UK Prime Minister and Xi takeover of China like all the time. That's like, these are my two. If my Twitter algorithm could talk right now, it would be like, wow, this lady is only interested in international news.
Let me ask you a question, Molly. In our lifetime, has there been a nuclear war?
No.
Has there been a nuclear war since we dropped the bombs on Hiroshima and Nagasaki?
I'm not talking about nuclear war, but where did this come from? But no.
I'm just putting it out there as just a general statement. It has not happened. I don't think it's going to happen. And has China invaded another country in our lifetime? I don't believe so. And Hong Kong was given back to them by the British, but that was not an invasion.
You're going with China is not going to invade Taiwan?
I don't believe so. I don't believe so.
All right.
No, I'm not saying it's not possible, but I don't think it's probable. And I think the probable case in the world is that cooler heads prevail, that the world tips towards less wars and more congeniality between nations. I believe that trend continues, even if right now we are in an acute state where it doesn't feel like that. Because I'm looking at the multi-decade trend of peace in the world and cooler heads prevailing and things being resolved. I think Ukraine gets resolved. I don't think China invades Taiwan. And I think the world bends towards justice and calm and resiliency. So I think this is like a dark moment in the world where people are realizing how resiliency doesn't exist in the system and then correcting that. And COVID plus this crisis and this war and some dictator bad behavior, it just makes everything feel chaotic. And then I think these things resolve themselves relatively quickly, in fact. The resiliency that this Ukraine war is going to create in the system, and the resiliency that will get created in the system because of the pandemic, is going to make the world more stable. And so Europe will be less dependent on foreign, on dictator oil. The US and the rest of the world will be less dependent on pharmaceuticals, PPE, and chips from dictatorships. And that will, in fact, make the world more stable long term. Because then when we have discussions with dictators or other countries like that, you're not as dependent on them, right? So I feel this is like a lot of short-term pain for an extraordinary long-term game. I'm super positive, you know that.
I do, yeah. I think we have just a different, interestingly, like philosophical take on time. Like, I think time is a wheel, and I just think these things reoccur.
Yes.
And that's sort of the nature of things. And there's not I don't think we're in a storyline that progresses to an ending, happy or otherwise. Does that make sense? Like, I think
agree
these things reoccur in
that.
life. And then on top of that, honestly, like, didn't you see that video of China literally of the cooler head being escorted right out of the meeting? Like,
yeah, who knows?
I think
we don't know the
fallacy
that,
is in assuming that the logical progression is the same in different cultures and among different people.
There could be black swan events, of course. And there could be, but here's what I think about the wheel.
Swan. China's like, we're going to do China 2025. And then they direct all the resources of the country there. And then we're going to like build all these miles of rail. We're going to do that. And then we're going to do this. And then they do it. And they direct all of the resources of a country. And she has more power in the world than any single human, and just stood there and was like, we're going to get back Taiwan. We're not ruling anything out. We're not taking anything off the table in terms of reunification. It is happening.
And if they do it and they lose trade partners and those factories go dark, they'll have a revolution because nobody will have work to do. And so these are the other balancing things that they have to consider. They just shut down
the whole country because of COVID zero, for COVID zero. They just did all that to themselves and have had no revolution and have disappeared millions of people.
Again, yeah, that's true. But imagine if iPhones and semiconductors are no longer made in China and they're made in Korea, Vietnam, and other places, and they don't have this influx of money coming in, and their factories are not churning out products, which I think is kind of what's happening in this as the wheel spins, is that people are saying, you know what? Yeah, it's a little crazy over there. The dictatorship's a little crazy. And as the dictators go a little crazy, people will say, you know what? I have to disconnect from the dictator. And then all of a sudden, it looks more like North Korea than a vibrant economic trade partner of China or Russia where Germans were building pipelines with them.
I'm saying they 100%, like, she does not care about that. I think the mistake is in assuming that he cares about that.
And if he doesn't, he becomes North Korea, and then the people take him out of power. So but I think here's the thing about the wheel. I think the wheel is trending upwards towards a better life for all humanity. I feel like as the wheel spins, yes, these things happen, but I feel like the gains in technology and democracy accrue to individuals who are living longer than ever, and less people are living in abject poverty than ever. And justice is better.
That's true. Yeah, I don't dispute any of that.
Yeah,
I also think we would be silly to assume that history will not repeat itself. It always has before. It always has. And societies throughout history, by the way, have had like a massively increased quality of living and then collapsed. I'm not even trying to be a bummer here. It's just more like I feel sort of Buddhist about it. It's like, I don't know, this is now like.
I think there'll always be instability, but I do feel like I'm in the Steven Pinker camp that things are getting so much better that we don't appreciate them. So while the conflict in Ukraine feels horrible, it's not comparable to World War II or World War I, et cetera, et cetera. But anyway.
Yeah. Anyway,
everybody crack a cold one.
We've got all the happy Monday, everybody.
Happy Monday, everybody. We got all the feelings here.
We got all the feelings. I don't know. I don't have any feelings about
Crypto Roundtable this Wednesday too. I'm excited about that.
Yeah. It's going to be it's just remained. Please ask him about the island. I won't be here on Wednesday, so I will not get to be part of the Crypto Roundtable with you.
That's all right.
But I look forward to listening to it as a fan. Anyway, all that's coming up, and those earnings, and much more philosophical musings about the state of the world. See you all tomorrow.
Bye-bye.
Bye-bye.